Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Oh, there is so much going on today, and we've been reading more than usual. Probably you have too. So we thought it was time for another edition of Clues in the News, what the headlines are saying, what it means to real estate investors. Today on the Real Estate Guys radio program.
When the world changes, investing strategy changes too. The coronavirus is disrupting economies, financial systems, and daily life like nothing in modern history. Sheltering in place might protect you from the virus, but a wait-and-see approach to investing now is like pulling the sheets over your head while the house burns down. It's not the time to be complacent. So we're calling our huge network of thought leaders, seasoned investors, and technical experts to find out what they're seeing, thinking, and doing to mitigate risk and capture opportunity, and we're recording all of it. We're calling it our Coronavirus Crisis Investing Webinar, and it's totally free. All you need to do is register. Remember, mainstream media doesn't talk to real estate investors. They don't understand you because Wall Street pays them not to. That's why the real estate guys are here. To register for the Crisis Investing Webinar, simply send an email to crisis@realestateguysradio.com. That's crisis@realestateguysradio.com. Real world wisdom is the best vaccine for a healthy financial future. Send your email to crisis@realestateguysradio.com.
Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, it's our financial strategist and co-host, Russell Gray.
Hey, Robert.
Big shout out to all the folks who attended the Secrets of Successful Syndication over the weekend. Oh my goodness, we had nearly 300 people, and that's because we had about 250, and then a bunch canceled. Not a bunch, maybe 20 or 25, because we turned the event from a live event to a virtual event, new territory for us, and then because of that, a whole bunch of new people joined, and it was phenomenal.
Yeah, we were actually over 300, and I think for our inaugural effort at a virtual conference, I think it came out technologically pretty good. I think content-wise, it was over the top. The surveys and the responses back we got from people were just fabulous. It was so exciting to see that. And it was really, I think with everything going on, and we're going to talk about that today in the news, it was just so encouraging to see, it was over 300 people that were willing to invest the time and the money to really take an optimistic look at the opportunities that are out there, because that's really what it is. You're looking at coming to a conference like that because you're saying, hey, how can I take advantage of what's going on in the marketplace? We talked specifically not just about making money for yourself, but the very important role that capitalists, that syndicators, that capital, private capital is going to have a role to play in cleaning up the mess that is in the process of being made right now. So we're going to get into the weeds on that in just a moment, but it's great to know that there are entrepreneurs and investors out there that aren't curled up in the fetal position, sucking their thumb, waiting for the boogeyman to go away, but they are looking at it like adults and assessing the situation and looking for where the opportunities are, believing that they're there, and they are, and then trying to figure out what it is they need to do and who they need to be connected with to take advantage of it. So even though there's a lot of things to be concerned about in the news right now, there's a lot of things to be excited about in the world right now.
Oh yeah, and other than being able to hang out socially, which we didn't get to do, we practiced our social distancing. It was really, really cool. Had lots of folks send in pictures of where they were taking the seminar, if you will, and we even did a virtual cocktail party. So a lot of fun. The next one happens in September. Hopefully it'll be live. That's our plan. We'll be live in Dallas, Texas with the Secrets of Successful Syndication. But either way, the show will go on. Today's show is about what's happening in the news, and you probably know there's a ton in the news. We're going to try to weed through a lot of it and discuss the angle from the real estate investor's perspective. Even articles that come out on the housing market aren't really aimed at us, real estate investors. They're not aimed at you. They're aimed at your neighbors who just own a home. So we're going to dig under the headlines a little bit. First of all, coming out March 30th, the day before the first day of the month, this is on Bloomberg. Nobody knows what will happen when the rent comes due on April 1st. From landlords to economists to Wall Street traders, a lot of folks are fretting over what's going to happen on April 1st. The question that's hanging over the U.S. real estate industry as $81 billion in rent payments come due is what's going to happen. As you probably know, several governors decided that they would put a moratorium on evictions of any kind, some for a month, some for a few months, some for longer. And of course, many real estate investors and even property managers are saying, well, that's kind of just a license not to pay your rent. I'm not sure that's exactly what's going to happen, but it sure does change things.
Well, I think if you could put a theme on what's going to be going on throughout the rest of 2020, and beyond, it's really going to be unintended consequences.
Yeah.
We're going to see a lot of cause and effect. And, when you reverse engineer it down the road somewhere, we're going to be looking at this in the history books, and we're going to look at what everybody did and what happened and how it chain reacted into the messes that are going to get made. So some of us that spend a lot of our time kind of looking at all that stuff, trying to figure out how, if you move lever A, how B, C, D, E, and F are going to be affected. But, when you're in panic mode and there's a lot of emotion at every level, I mean, you can imagine the pressure on the political leaders, the corporate leaders, the banking leaders. All of these people have tremendous pressure, whether you like them or not, whether you trust them or not, whether you believe in their motives or not. At the end of the day, they're under intense scrutiny and under intense pressure. And so if you can imagine, if you've ever lost control on an icy road, how you tend to overreact, and then your overreaction creates another reaction that you overreact to, and you just start fishtailing out of control. I think we're going to start to see some of that beginning to happen. And nobody really does know what's going to happen, but I think that there's going to be a lot of things that are unintended. So you're going to hear policymakers come out and say, okay, this is what we're doing, and this is why we're doing it. And then they pull the trigger, and something happens they completely did not expect. And we're all going to be going, you should have known that. Well, maybe they should have, maybe they shouldn't have, but it's not going to matter. It's going to be what it is, and we can complain about what people should or shouldn't have done. I think one of the big lessons as an investor when you're going through times like this is to stay calm and just look at what's really happening. And you have to divorce yourself from how you feel about it politically and just accept it for what it is, and then decide what options it gives you, what choices you can make, things that are in your control to be able to respond to it.
A couple weeks ago, we talked about how real estate investors can kind of respond to the coronavirus, and we said you ought to reach out, proactively to your lenders, to your property managers, and I would definitely be paying close attention to what's happening in my rental portfolio as the first of the month comes and goes. So reach out to your property managers. You don't have to do it 10 a.m. on April 1st, but let's find out what's happening early on, because they're going to be the first ones on the front line to get an indication of what's really happening. Now, we could camp out on that, but we got a lot to cover today. So what happens when folks don't make their mortgage? Well, the Washington Post said on March 27th, the mortgage industry seeks billions in federal help as homeowners stop paying their loans. So this was before the stimulus package was signed, and it goes on to say many of the country's largest mortgage lenders are warning that they will soon be pushed to the brink of failure, with millions of Americans laid off due to the coronavirus outbreak, likely to miss their next loan payment. In fact, they go on to say that if just 25% of borrowers cannot make their mortgage payments because of a job loss or other financial disruption, then they'll need $40 billion in federal help over the next 3 months and $100 billion over the next 9 months. So here's an industry that was at the epicenter of the last downturn, and they aren't now. They have nothing to do with coronavirus or restaurants not being open or stadiums not having concerts and games. But as you said, Russ, the unintended consequences, the ripple effect, if my tenant can't pay me, then I can't pay my mortgage.
Yeah, I mean, and I think that's common sense. Hopefully the policymakers have figured that out, and they're going to create some type of relief for the banks, for the landlords. It's just that once you start trying to patch over one problem, it's like whack-a-mole, it's just for every one you knock down, 3 more pop up. And it's really going to be challenging for people to keep a handle on this thing. So again, there's going to be distress. There's going to be a lot of distress in the market. The people that have cash reserves, the people that have conservative structures, the people that are in the right markets and the right neighborhoods that really understand their tenant base and those jobs are going to have maybe at least a better chance, especially if they've been proactive coming into this. But the mortgage company is going to be in trouble. And when you think about, they say even 25% of the borrowers not being able to make their mortgage payments. If you go back to 2008 and look at the percentage of people who did not make their mortgage payments and the ripple effect that those bad mortgages had in the entire financial system, this is that probably at least 100 times bigger. And it's exactly what Peter Schiff has been warning about since 2008 when he reissued Crash Proof, but he wrote 2005, 2006 leading up. He recognized that the mortgage industry was in trouble and it was going to take down the financial system, the banking system. And people thought that was the big crash he was predicting, but it wasn't, because what he said what's going to happen as a result of that is the Fed is going to come in and paper over that mess, and they're going to make an even bigger mess. And when that breaks, That's when the real crash is going to happen. Well, ladies and gentlemen, that's what we're watching happen right now. And the good news is, if you've been following a guy like Peter, like we have, it's not surprising to you, and you kind of have a leg up on understanding what's happening. These headlines aren't surprising to you. They're still disturbing, and you need to pay attention, but at least they're not completely shocking. And that helps you remain sober-minded as you watch what's happening, and you could think about what it is you can do about it. But we've got a lot more to talk about here.
So another article on Sunday, March 29th from CNBC, mortgage bankers warn Fed mortgage purchases unbalanced the market, forcing margin calls. So here's what they're saying here. The Fed bought $183 billion of purchases last week of mortgage-backed securities in an effort to drive down rates. And the MBA, the Mortgage Bankers Association, is warning that could be a large-scale disruption because of those actions.
I could go into the weeds on this. I'm going to try to keep it super, super simple. And the only reason I know anything about this is because, as I've shared many times on this program, I got blown up in 2008 when I was in the mortgage business, destroyed my business and destroyed my real estate portfolio. And it was because I did not understand exactly what goes on behind the scenes in the mortgage industry. In this case, what happens is mortgage bankers, when they're out there, they're lending money out of their own credit lines. And then they take those loans that they've made, they package them up, and they go sell them to Wall Street as mortgage-backed securities. And so as long as there's buyers in the marketplace, they can turn over that paper and then replenish their pool of money and continue to make loans. And so during that period of time, just like a precious metals dealer, during that period of time when they're holding the inventory, they're taking an interest rate risk. If interest rates move in the wrong direction, then the value of that paper they've produced can go up or down. If it works in their favor, that's great. But if it goes in the wrong direction, that's bad. To mitigate that risk, they hedge. And hedging means that they sometimes take out loans, or they do things in such a way so that if interest rates move in the wrong direction, they don't suffer as big a loss. The challenge is in the Fed's zeal to keep interest rates down, to keep people borrowing, to prop up real estate prices, they've stepped into the market as an artificial player and purchased $183 billion of mortgage-backed securities, which means they bid up the price of the securities, which means they push interest rates down. The Mortgage Banking Association was hedged on the wrong side of that bet, if you will. And that act, which they didn't anticipate, I suppose, has now resulted in them getting margin calls. A margin call is when you have borrowed money or pledged a security, and then the amount of equity or the protective equity that the lender has. It's just like if you took out a home equity line of credit, say you take out a loan at 80% loan to value, except that if the property value were to drop by 10%, you would have to bring in 10% of new money to reestablish the 80% LTV based on the new valuation. Okay. So, but that doesn't happen in real estate, but it happens in the bond market. And so what's happening to the mortgage bankers right now is they're getting margin calls, meaning they have to come up with lots of cash. And that's a theme throughout the marketplace right now. That's why you're seeing a big run on US dollars. That's why you're seeing the Fed print tons of dollars right now, because everybody's moving to cash, and the Fed is also stepping in and buying things, trying to prop up prices. But again, as we talked about at the top, unintended consequences. I don't think the Fed went in there to purposely blow up the Mortgage Bankers Association or the mortgage banking business, but the net effect is that's what they've got the potential to do. And so now they've created a new problem that they're going to have to try to deal with. And so there's a lot of that as we're going to see going on throughout the marketplace. And so the mortgage industry is one that directly affects real estate, but it also directly affects the bond market, which affects everything. And it's not the only industry that's going through this right now.
We'll talk about some more when we come back. It's Clues in the News, what's happening in the world and what it means to real estate investors today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
All aboard! Registration is now open for the Real Estate Guys 18th Annual Investors Summit at Sea. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, authors of Prosper, Chris Martenson and Adam Taggart, and the author of The Creature from Jekyll Island, G. Edward Griffin. Also back is the editor of the Gold newsletter, Brian London. real estate developer Beth Clifford, CPA Tom Wheelwright, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 8th Investor Summit, Peter Schiff. Plus, returning for a 7th time, the best-selling personal finance author in history, Robert Kiyosaki. It all begins June 11th in Fort Lauderdale, Florida. Visit realestateguysradio.com and click the tab that says Summit to book your cabin now. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit at Sea and make your plans to spend a week with the Real Estate Guys, Peter Schiff, Robert Kiyosaki, and an all-star faculty on the 18th Annual Investors Summit at Sea. When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, it's Ken McElroy. I listen to the Real Estate Guys, and so should you.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com. If you find yourself with extra time these days, check out the archives. We've got hundreds of shows for you to listen to. Today we're talking about what's happening in the news. We do a show like this at least once a quarter, Clues in the News, and right now we could be doing it every week. A lot of different disruption happening. Let's cover a few more articles in this vein. Back on the 17th of March, Motley Fool came out and said, add casinos to the list of industries seeking a government bailout. The article says casinos are among the many businesses facing new restrictions on their operations in the wake of the coronavirus outbreak. Yet, where restaurants are also facing new closure orders, many are able to still execute carry-out orders and delivery to offset some of the impact. Casinos don't. Obviously, you know what's happened in Las Vegas. We talked about that a couple of weeks ago with all the big casinos shut and basically the town shut down. And now that industry's going to want to bail out. Later the same day, USA Today says, facing a catastrophe, the hotel industry and suppliers seek $250 billion bailout package due to coronavirus. Obviously, people traveling less, and this specifically talks about the devastation that the travel pullback is having on the hotel industry. The industry is hoping for $150 billion to allow hotel owners to continue to make their loan payments. And according to Chip Rogers, the CEO of the American Hotel and Lodging Association, the contraction in travel because of the coronavirus has already had a more severe impact on the hotel industry than 9/11 and the 2008 recession combined.
Well, that's not a surprise. And it goes back to what we've been talking about, this ripple effect. You know, what is effectively happening, if you can kind of just take a step back and try to get a visual. The United States, or in fact, the global economy, has just had a gigantic economic heart attack, meaning the blood has stopped pumping. So cash is not flowing through the veins, the arteries, the currency is not moving around. So because money is not moving, everybody is being malnourished. Nobody has any income. And so they can't pay their debts. That's really where the problem is. If the system didn't have so much debt, if people had savings, we would be able to weather this storm a little bit better. But it's been pretty well publicized that the vast majority of working class people don't have $1,000 in savings. You can imagine as a real estate investor, especially if you're a working class, B-class apartment investor, somebody investing in the working men and women of the world, these are where they work. I mean, just think if you're a real estate investor in Las Vegas, what you're going through right now, casinos, major employer, hotels, major employer, airlines, major employer, all of that has come to a screeching halt. The entire town is on a 30-day lockdown, the entire state of Nevada. I mean, think about that. That is a massive heart attack. The Fed is busy giving a financial transfusion, meaning they're putting lots of blood into the body. That's what printing money is, but that doesn't get the heart beating. And so when the heart starts beating, then there's going to be other consequences, and perhaps we'll have time to talk about that. But just kind of understand this is what's going on right now, and it isn't isolated to one sector or one segment of the economy, not one geography. This is going on worldwide, and it's touching every industry. And that's why you've got to be paying attention to what's happening. I mean, you've got to be prepared to weather this, and it's not going to be easy. But the good news is, on the backside of it, there's going to be a lot of opportunity, and that's what you have to continually focus on. This isn't going to last forever, but it's going to be intense.
Now, I've got another article here on the hotel groups and an article on airlines seeking $50 billion, but I think that's all pretty obvious. Let's switch gears on industries for a minute and talk about oil, because here's an article that came out from the Financial Times on March 30th. Oil industry facing historic production shutdown. So I know, Russ, you've been following what's been happening in the price of oil. And of course, when the price changes and it's changed lower, then there's less incentive for producers to produce the oil, pull it out of the ground and send it anywhere, because at these prices, it's very difficult to make any money.
So the oil discussion is a big discussion, and there's a lot here, and I'm going to try to unpack it real quick. The obvious thing is, when oil prices are low, that's a boon to your tenants, and that can be a boon as a cost input. But the reason it's there is because nobody's consuming, nobody's producing, nobody's going to work. Airlines aren't flying. I mean, energy's not being used, so demand is way down. That's one of the factors. The other factor is they say that Russia and Saudi Arabia are engaged in a price war. Well, if you remember the last price war we had, I think we could make the argument it was aimed at Russia. So they said it was Saudi Arabia going after the shale oil drillers in the United States, but I really think that it was a takedown of Russia. And Russia's economy is very, very dependent upon oil. Anyway, now Russia has a chance to return the favor, because Russia, by refusing to participate in the OPEC cartel and curtail production, has basically driven the price down, and that's going to hurt the United States. It had just achieved energy independence in terms of being a net oil exporter, in terms of producing a lot of American jobs and a robust economy on the backbone of shale. But here's the dirty little secret. Most of that was driven by debt. The shale industry is horribly in debt, trillions of dollars of debt, and that debt is all potentially in danger of going bad. It's the same thing as the subprime crisis way back when, or pick an industry right now where debt could be going bad. And this is the thing. We've been watching this for the last couple of years. We've been very concerned about the level of debt in the oil industry and whether or not the industry would actually become profitable enough to be able to service it without being able to roll it over. So this is going to be a big one. And this is one you should be paying attention to, not just for the oil jobs and not just for the input to cost of production and certainly, cost of living for your tenants, but really the impact on the financial system. Because the financial system, when the credit market breaks, then the mortgage industry goes away temporarily, just like it did in 2008. And when that air is out of the real estate valuation jump house, values fall. If you're on the wrong end of that, if you only have equity, if you're speculating, if you're in the middle of development projects or flipping, you could get very wrong-footed. Whereas, if you have good solid cash flows, you're in good markets, I mean, you can weather the storm, but you need to be paying attention to what's going on right now. It hasn't broken yet, but it's definitely showing signs of weakness.
Well, and pricing changes all the time, right? The price of gold, the price of equities, the price of oil on Sunday night hit a 18-year low. The benchmark, which is the West Texas Intermediate oil, slid below $20 a barrel. And then there was an article that came out a couple weeks before that on Markets Insider saying the global oil price war is pushing highly indebted U.S. shale companies towards default, an event that could trigger financial contagion, what you were talking about, Russ. So a few weeks ago, folks watching the oil industry were concerned about if the price continued to go down, all this debt you've talked about, Russ, is going to be a problem. Now we're seeing that, in fact, the prices have gone down. Now, again, I talked a couple weeks ago about talking to our good friend Bob Burr from PanX, talked to him today, and I tell you what, the guy's like a little kid. He's more excited than ever because he's thinking the way that we're thinking, which we'll share before we're done today, and that isn't just to buy into all the doom and gloom, it's to be able to figure out what to do about it.
Well, the backside of doom and gloom is hope and opportunity. The backside of a storm is sunshine. I mean, that's what happens. There's cycles. Unless you think this is literally the end of the world and the end of humanity, then we know that this too shall pass. So we have to survive it, but we're intending to do a lot more than survive it. We want to thrive. But here, I want to just say one thing real quick. I know it's easy to be intimidated by all this information. I'll tell you how I think of it. It's very simple. You have job losses. That's a concern. That's an economic problem. When people don't have income, they can't spend money. That stops the economy, economic activity. Number two, debt implosion. We've been talking about that. That's the financial system. That's a second thing. The third thing is the dollar, and we're going to talk about that in a little bit. But right now, the Fed is printing money like never before, trying to paper over all of this. And the big question going forward is, can the dollar withstand this for long before people lose faith in it? And we'll talk about that on the other side.
That is the three-headed monster, the economy, debt, and the financial system, and the dollar. We'll talk about that. Plus, we'll talk about the big news, the stimulus package, next. Your turn to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 14th to 17th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2019 was the biggest year in tourism Belize has ever witnessed, and this year is already on track to beat it. How does that translate to real estate investment? That's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me August 14th to 17th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market's interesting to you. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you're registered, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 14th through 17th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show today. It's Clues in the News. We're talking about what's happening in the headlines and looking beneath the hood to see what does that mean to real estate investors. In fact, we're working on a really cool thing, our crisis investing webinar. We've gotten some of our big brain friends to agree to chime in on this. It's awesome. We're putting it together now. You can get all the details. It'll be free. Just send an email to crisis@realestateguysradio.com. crisis@realestateguysradio.com. Before we get back to the headlines, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. In just a minute, I'll ask you the question, and you will quickly email us the answer to trivia@realestateguysradio.com. You'll need not only the answer, but your name and your mailing address, because if you're the winner, we're going to send you a really cool prize. It's a book called The One Thing That Changed Everything, a story of amazing folks who just have some real inspiration for you. Good book for these challenging times. That could be yours if you know today's real estate trivia question. Last week on the show, we talked about navigating these uncharted waters, and we asked this. Last week, that would have been 2 weeks ago, the Bureau of Labor Statistics published the preliminary February 2019 unemployment notes for the U.S., and there were 4 states tied for the lowest 2019 unemployment. Name at least 2. Of course, all that has changed in the last couple of weeks, but the 4 states were Iowa, New Hampshire, North Dakota, and Vermont. Prior to all the coronavirus mayhem, those were the lowest unemployment figures in those states. Here's our real estate trivia question for this week. Which U.S. state is the biggest provider of steel pipe and cast iron goods in America? Yep, one of the states in the U.S. produces more steel pipe and cast iron goods than anyone else. Which state is that? If you know, or want to guess, or live there, send us your best answer to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, your mailing address. The first person that gets it right gets the one thing that changed everything. That's today's real estate trivia question. It's clues in the news, and speaking of one thing that's going to change everything, the stimulus package, $2 trillion. Oh my goodness. So lots of articles about this. CNN came out and said, Senate approves historic $2 trillion stimulus deal amid growing coronavirus fears. There's another 36 articles similar to that, but this one goes on to say that capping days of intense negotiations, we now have one of the most expensive and far-reaching measures that Congress has ever considered, and it was voted in unanimously at 96-0. Now it's going to go to the House for a vote, and as we know, it did, and it passed, and it's a lot. In fact, Tom Wheelwright was presenting for the Secrets of Successful Syndication virtually this weekend. He had a lot to say about this. I knew it would be true. I didn't put him on the spot, but sure enough, he said near the end, now I have read the entire thing. That's just so Tom. So it's 800 pages, and he's read the whole thing, and boy, there's a lot of money in this.
There is, and just to give you a little perspective, back in 2008, leading up to 2008, the Fed's entire balance sheet, this is like kind of the simple way to think about it, is just how much money is out there. It's not technically correct, but just to give you an idea, was $800 billion, the Fed's entire balance sheet. Then they did the stimulus package and all the TARP and all that stuff that happened in 2008, and the Fed's balance sheet grew with quantitative easing 1, 2, and 3 from $800 billion to $4.5 trillion. $2 trillion is a huge, huge number. Now, this is government spending, and I think there needs to be just a little bit of a distinction. What the Fed does when they print money and they lower interest rates and they ease credit, that's called monetary stimulus. They stimulate the monetary system. When the government signs a large spending bill, that's called fiscal stimulus. And that's what this is. This is the government spending money. And what they're basically doing is, look, the economy is stopped. The big heart attack we talked about earlier. And they're putting a $2 trillion electric paddle on the chest and going, boom, trying to get money flowing by spending it. And it remains to be seen whether or not it's going to work or how it's going to work or whether it's going to be spent strategically where it'll actually do some good or whether it's just going to be thrown away on a bunch of, what they call pork barrel or boondoggles. We'll see. Tom Wheelwright, I think when he went through it, and I haven't looked at it, but Tom did, said there was a lot of pork in it, a lot of unuseful things. I mean, that's what happened to the first stimulus in 2008, which is why it really didn't create much of a recovery. So we shall see what's in it. But the one thing that we do know is it's a lot. And number two, we get from both sides of the aisle, the government seems to be very united in it's just the beginning. There's been talk that it could be $4 to $6 trillion when the complete stimulus is all done. And that is just an unbelievable amount of money. And I know it's hard to get your mind around, but hopefully that gives you a little bit of perspective.
Well, NPR actually put out a really interesting article where they did a graph, and we can't really show that to you on the radio, but it's like this. Of the $2 trillion, $560 billion is the biggest part. That's for individuals. So that's the kind of help for people that are laid off and extending unemployment benefits and people that had to shutter businesses and so forth. The next biggest amount is $500 billion, so a fourth of the measure for big corporations. And we just went through some of those that are going to need help: airlines and hotels and casinos and cruise lines and on and on. Next in line is small businesses at $377 billion. Tom talked about that this weekend too, because there are some things in there for small businesses that are having unique challenges because of this. That's followed by state and local governments get $339 billion, followed by public health at $153 billion, and then education at $43 billion and some other things after that. So there's a lot to it. And of course, we don't know exactly what's in all of it. And I'm guessing even people that voted on it probably don't know exactly what's in all of it. And there's more coming. An article came out on Bloomberg on March 27th, said the Fed's cure risks being worse than the disease. So obviously the debate is, what do we do because of the economic shutdown? How do we fix it? But there's definitely this concern that with all this cutting and changing and interest rates and money going out and money printing, the cure could be worse than the disease.
Yeah, I think what a lot of people are concerned about is that it's easy, just like in the Great Depression, for the federal government to get very, very large and take over very large chunks of private industry. Right now, the Fed has been prohibited from investing or buying anything that isn't directly guaranteed by the Treasury. So they can buy Treasury bonds, they can buy mortgages that are backed by the government. They're not allowed to buy stocks, they're not allowed to buy corporate debt, they're not allowed to buy a lot of things to prevents the Fed from just printing money and purchasing private business. That would effectively be nationalizing or socializing, if you will, private industry. But they found workarounds under the guise or cause of getting money to the people who need it the most. And since the Fed is the only source of money, they print it out of thin air. They created these special vehicles. I think SVPs, I think they call them. It's structured vehicle something. I can't remember. But basically what they do is they're proxies. It allows the Fed to print the money, give it to the government. The government then uses it through these vehicles to purchase private debt, to purchase private equities. You know, we've had the plunge protection team since the 80s, back in the 87 crash, stock market crash. That's been around for a long time. The bottom line is it's a lot of Fed printing and a lot of market manipulation. And so a lot of the rules of going into the market and just kind of looking at, good old fashioned supply and demand and market dynamics, they start to get perverted or tweaked in environments like this. And it's hard to know what's going to happen. So the one thing that, you have to do is pay attention. You have to kind of get your mind around the way the systems work and really kind of what's happening. And I find just looking at it in very simple terms, and then you kind of drill down each one of the little silos and you ask yourself, if this, then that, and you listen to people who follow it, guys like Peter, guys like Brian London, people that are paying attention to what's going on in different segments of it, and then try to figure out how does that relate back to me on Main Street and my key inputs, which are going to be my rental income, my tenant's income, my interest costs on my mortgage, my property taxes, the local legislative environment. I mean, all of those things right now are shifting because of what's going on. So as a real estate investor, you need to be very, very alert and proactive, because real estate moves slowly, which means you can't react as quickly as maybe you'd like to as things roll out, which means you have to really, really be paying attention so that when things do move, you've already begun to think about what your routes are to either protect yourself from a potential problem or to take advantage of a potential opportunity as it begins to develop.
We'll talk about those routes and some of the things you can be doing, and maybe even some silver lining when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Do you have a self-directed IRA invested in a syndication? Guess what? It's a ticking time bomb. Why? Because IRAs get hit with UBIT taxes, even Roth IRAs. Hi, I'm Damian Lupo, and we fix this problem for you forever. It gets even better because using the EQRP, you can literally get rid of taxes from all of your gains forever and protect your nest egg. The EQRP is the best vehicle to get it done. IRAs can't do it, not even Roth IRAs. You see, UBIT happens whenever any type of IRA invests in anything with debt. Don't worry, even if your IRA is already invested in a deal, we can kill that tax. Our team at Total Control Financial is here to give you control of your retirement money and free you from that deadly IRA tax forever. Want to learn more about the EQRP? Send an email to eqrp@realestateguysradio.com. I'll email you my special report and send you a copy of the QRP book. Paying a 37% UBIT tax is stupid. First step to getting rid of that tax is to send an email to eqrp@realestateguysradio.com today.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer. And you, ladies and gentlemen, you lucky people, are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Tell a friend about the Real Estate Guys. Just because you listen, you can't assume that they do. So be a friend and let them know. It's Clues in the News this week. We're looking at all kinds of headlines, and oh my gosh, there's so much going on. I think what it comes down to is the system, the economic system in place in our country and in our world is being exposed based on everything that's happening. There's a lot of frailty in the system.
Yeah. I mean, if you think about it, just think of it this way. If you're out there and you have a good job and you make a good living, but you don't bother to save money, you've never put up anything for a rainy day, you're highly levered, so everything that comes in goes right back out. Every asset you own has been pledged as collateral. And so you're geared only for sunshine. Now, if you lose your job or get a big demotion or pay cut, your entire lifestyle, all the prosperity that all your friends were envying starts to unravel, and it starts to unravel very quickly. That is what's happening to the global economy right now. There's very little equity out there relative to debt. In fact, virtually none. Almost every government, every bank is very thinly capitalized. Most people are operating on extremely tight cash flows that are being propped up by record low interest rates. Interest rates cannot be raised at all. If they go up, it just starts to unravel. And the biggest problem of all, and this is the hardest one to get your mind around, is something that is called rehypothecation. What that means is that somebody has an asset, which is your debt. Like when you take a mortgage out, that is your liability, but that is the mortgage investor's asset. And it is only good if you are. If you make your payments, it's great. And if they can seize your house as collateral, then they have security. The problem is if you could take out a mortgage, if you could take out 100 mortgages against one house, you can imagine that it's all good as long as you're making all your payments. But as soon as you stop making your payment, there's only one piece of collateral for all that debt. That's what's gone on in the system. And so now then when these margin calls start happening and people start scrambling, this collateral turns out to be no good. And that's what causes the contagion. These balance sheets are daisy chained together because one person's asset is another person's liability, and they've pledged that to somebody else who also holds it as an asset, and then it's a liability. That's what happened in 2008. It's something called counterparty risk. You need to be very aware of it in order to try to stop this contagion from spreading, not the coronavirus, the default contagion. The Fed has no choice but to print trillions and trillions and trillions of dollars. And so the thing that we're really going to be watching going forward, the thing that we think is really going to be the thing that's going to sound the alarm, is going to be the dollar. And the way we track the dollar is both by watching dollars and interest rates and bonds, but also by watching gold. And when you learn to put those pieces together, that's the third head of that three-headed monster. We know the economy's in trouble and job losses are happening. We know the financial system is frailty and defaults are imminent. The question is is the dollar strong enough to patch it all up, or are we going to lose the dollar too? And for Americans who've never thought outside the dollar, and we covered this intensely at Future of Money and Wealth a few years ago, and that content is just as valid today, probably more so than it was when we did it, because we saw this coming because the people we hang out with told us, and they were right. Then you have moves you can make to insulate yourself from it, but you have to understand the problem before you can make those moves.
Hey, if you're a little bit lost when we're talking about, hypothecation and pledging and Federal Reserve and how the open market committee, all that stuff, you don't know all that stuff, you're not understanding that, it's perfectly okay. But you got to hunker down. You got to learn. If you're interested in 14 plus hours of training from incredible people like Dr. Chris Martenson, G. Edward Griffin, Robert Kiyosaki, Simon Black, Brian London, Peter Schiff, just send an email to future at realestateguysradio.com. Future at realestateguysradio.com. You'll learn all about that training, which is something you can do while you're sheltering in place. So what do we do about all this? What are the takeaways? Well, this could easily be the financial crisis to end all financial crises, at least so far. Bigger than last time, 2008, probably even bigger than 1929 in comparison. But here's the thing, folks. The bigger the crisis, the bigger the opportunity. That is, if you're aware, prepared, and prone to action. So let's talk about, in our final moments, some ways that you really can prepare.
Yeah, I mean, I think step one is you got to become educated. You just have to invest time to get educated. And as a real estate investor, it's harder because there's less people out there talking to you and really understand what it is like to be you. That's why we do what we do. There's other people out there, but I think you definitely want to invest time and money in your education because Ben Franklin said it the best, an investment in education pays the best dividend.
Yeah, absolutely. And you will not be any worse off for becoming more educated. And let's face it, a lot of folks have more time these days. They got to look for stuff to do, and getting educated, that's always your best investment. And here's the other part. You can't just be educated on your own in your little igloo, sequestered from the world. You still, even with social distancing, have to network, get around the right people, figure out who are the thought leaders in the space and who is it that you can pay attention to and get connected with.
Yeah, this term social distancing, I kind of take exception to. It's because we're not really socially distant. We are physically distant.
Right.
We can be very connected through social media. We live in a wonderful time in technology where we can all be isolated but still be very connected. Take advantage of that. Connect with other seasoned investors. If you're lucky enough to know seasoned investors, people who've been through down times before, make time on your schedule to spend time with them. Do mastermind calls, get on group webinar conference calls, whatever you got to do. Talk about what's going on. Ask them what they're thinking, what they're doing, what they're reading, who they're listening to. Talking about it helps refine your thinking. If you have boots on the ground teams in different markets, that's what we're doing. We're talking to all of our boots on the ground teams. What are you seeing at the street level? Not what we're reading in the headlines. What are your tenants telling you? What are your property management telling you? What's happening in the valuations? What's going on in the local chamber of commerce and the local regulators? How is your market holding up? Where are the opportunities? Where are the risks? And the other thing is, I think, start building up in your network sources of private capital. If these credit markets, seize up, then private capital is going to be the way you get things done. You'll probably have a little bit, but if you pool your capital with other people, which is why we've been big advocates of syndication and are even bigger advocates of syndication right now based on what's going on. But that's all part of building your network of relationships. So there's a lot of work to do there. And those are all things you can do while you're stuck at home and only have access to the internet.
So education network number 3 would be to restructure any of your debt that you can. Look at your whole portfolio, figure out, first of all, do you have enough liquid reserves in place, especially liquid reserves outside counterparty risk, outside the system? Cash, even though cash is trash, this is the time you want to have some cash. Precious metals, if you've not gone down the path of understanding precious metals, another great thing to do is to be thinking about that. If you don't know anything about holding gold and silver and the different ways to do that, you can get a great report from our friend Dana Samuelson by sending an email to Precious Metals at realestateguysradio.com. Precious Metals at realestateguysradio.com. Dana kind of breaks down the how and why of precious metals. And then also the FDIC, right? FDIC came out and even did a video about, hey, folks, you really don't need to run to the bank and get cash, which scares the heck out of me.
Well, yeah. I mean, if you think about it, why are they telling you? It's like, hey, don't look in that closet over there. Oh, there's nothing over there. I mean, it doesn't make any sense. But the people who understand what's going on right now, if you go down to your local gold dealer and try to buy gold, he doesn't have any. It's very difficult to get your hands on physical gold right now. And they say that there's fraudsters out there that are telling people that the banks don't have money. But I know personally, I sent my gal down to go get some money out of the bank. I asked her to withdraw $10,000 of cash and they told her they could only give her $2,000. And then when they actually went to go get the money, they could only give her $1,000. And I had 2 or 3 different people tell me that same story. And this was a major bank whose name you would all know. Now, they're saying, yeah, we've had a lot of people coming in asking for cash. Okay, so maybe it's like toilet paper and there's plenty out there. But you know what? If you need to use it and you don't have it, it's messy. So it's good to have some cash outside the system. And it's a good idea to have some liquidity outside of cash. And that's what precious metals gives you.
Looking at your whole portfolio, also now may be the time to jettison some marginal holdings. And also, if you've got equity and you can get a loan against it and your credit's still good, grab some of that stuff. We were preaching that message in 2006 and 7, and folks that followed that advice did pretty darn well. Again, not trying to run to the exits, it's just trying to have all the bases covered. So a lot you can do to restructure your portfolio. Just take a look at it, see how everything's performing, and stress test a bit. And then the fourth thing is, stay tuned to the Real Estate Guys. If you're not subscribed to our newsletter, you can do that for free at realestateguysradio.com or send an email to newsletter@realestateguysradio. Keep listening to the podcast. We're going to have more content on our YouTube channel, so if you haven't found that yet, go find that. And then as we mentioned earlier, we're doing our crisis webinar. This is going to be really awesome. I'm not sure exactly when or how, but we're already putting all the pieces together. We've got buy-in from a bunch of the smartest people we know. It's going to be free, and all you have to do to get on the list is send an email to crisis@realestateguysradio.com.
So listen, I know it's been a lot, and so I think you just have to think of it this way. The world is changing. Like it or not, you can't stop it. It's going to happen. The only thing you have control over is how you're going to respond. A lot of people are going to respond with fear, insecurity, paralysis. We're choosing to respond with curiosity, confidence in ourselves and our fellow man that somehow on the other side of this, we're going to figure it all out, and then taking effective action, doing the things that are inside of our control so we can better respond to the things that are outside of our control. As long as the system allows us to own private property and conduct business, then we're going to be fine. And if the system gets so bad that we lose the right to own private property and we lose the right to conduct business, financial loss, whatever you choose to do, is going to be inevitable. It's not going to matter. So we're choosing to believe that that doomsday scenario is not going to happen. We're going to be able to own property. We're going to be able to do business. And we know that we just have to work our way through all these issues as individuals, as teams, and as a society and a race. And I think we're going to do that. And so we encourage you to be a part of it. Keep your chin up. Look for the opportunities. It's going to be there. We're going to keep bringing you our ideas and information.
Hey, next week on the Real Estate Guys, it's another edition of Ask the Guys, your amazing questions and our answers. If you have questions, especially about any of the stuff we've discussed today or anything that has to do with coronavirus, or it doesn't have to be that, just real estate questions in general, just fire away. You can go to the website at realestateguysradio.com and click the button that says Ask the Guys. We'd love to hear what's on your mind. It'll be a great show. And until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.